Good evening. Welcome to ShadowTrader Weekend Edition, not the real Weekend Edition. Obviously, you see I am here in my office. I do not have the studio today. Just camera and editing people had some other commitments, so we couldn't shoot the regular show, but we will be back at it again next week. And as I promised, I also have a special guest. I'm going to start to be having special guests pretty often on the program, so I'm excited about that. So that's all still happening. So our next official Weekend Edition will be on May 10th. But in the meantime, we've got a lot to talk about, so I thought I'd go through some charts. We had an end of month. We're going to talk about some monthly charts, S&P, NASDAQ, Russell, as we always do. I want to go over sectors with you as well, because we have not only end of month, but the same push-pull that I've been talking about in terms of some sectors strong, some sectors weak is still happening. And most importantly, we want to see how those sectors are looking as the markets feel like they've turned a little bit more bullish. A lot has happened this week, and we got a huge reversal off of the lows, as many of you know. And so we're going to look at the technical implications of that as well. All right. Beyond that, as we were coming off those lows, I want to show you a trade that we did in the Weekly Options Advisory, which was actually one of the largest losing trades that we've had in a while. And in the interest of full transparency, and obviously if you run an advisory as I do, and you do real-time trades and you track all the trades, you've got to talk about losers as well as winners. And this trade is especially educational because it happened to us as a loss right on the turn, so to speak, right where the market kind of bottomed out on Thursday. That's where we kind of got caught with some long puts, and I'm going to go over that trade and show you exactly what it was, what we maybe could have done different, and how things turned out at that low and kind of changed the whole tone of the market at that time. All right, I'm also going to give you a number of trade ideas this week, similar to what I usually do in the Weekend Edition, where I talk about the number one draft pick. In this particular one, I have a few of them, so I'm going to give you some good ideas for next week. And last but not least, we have some really big breaking news in our Squawk Box, which is now no longer called Squawk Box. ShadowTrader.net is rebranding that room as the Live Trading Suite, and that Live Trading Suite is now split into two rooms at one price. Same price as before, nothing different. You can still get a whole 6 months free if you open an account with our partners at Tasty Trade. So I'm going to give you all the information on that as well. And without further ado, let's get into the charts. Okay, let's begin. I'm going to kick it off here on these monthlies, because obviously a month just ended, so we should at least take a look at what the monthly bars look like. So the month in question is April, of course, which is this bar, which was a bearish bar. This activity here is the first couple of days of May. What I find noteworthy about the market in terms of how it came down and where it came down to is that it would have made more sense to me if the market had kept selling. I'm saying if it turned out to be more bearish, we probably would have went to this 4,800. If you recall, I talked about this in prior weekend editions. That would have been the ultimate target, but we didn't. The market obviously turned around a bit, which we'll get to in a moment. So it was a bearish month, but it certainly did not come down as far as was expected. Let's take a look at the NDX here on the same time frame. Same exact thing, right? We were looking for a move down at least to the prior highs here, which did not happen. It stopped kind of way short of it, and obviously these are the couple days of May that are ripping up. I want to take a look at the Russell just for 1 second as well, just to kind of drive the point home that there's really nothing going on in small caps. And regardless of what you may have heard or what people might be telling you about small caps, they're not doing a darn thing. I mean, it's just this constant one bar up, one bar down. And these are monthly bars, so this is a lot of price action, which is just back and forth. Even this rally here does nothing more than just take back 100% of this move. Then it takes back 100% of the move again. Then it takes it back again. And now you've had about 4 months of just straight chop of a, let's say, like a less volatile range, kind of smaller bars, and they're all just kind of lining up. So I would say there's nothing going on in small caps, and I think if you've got money committed to this index, you're just kind of wasting your time because it's not really going anywhere. So just forget about that. Okay, let's get into the S&P on the daily chart so we can see a little bit more granular view, obviously, than the dailies, and we can take a look at how things have been panning out over the last couple of sessions. So this is here, obviously, the downtrend that we just had. And here's where things got interesting, really on kind of Thursday and Friday of this week. And this is where I want to draw your attention to the trend lines that I was alluding to earlier. This is our downtrend here. Okay, this is our downtrend. And what has made this market really tricky over this week, if you notice, that this Monday action right here was really tricky because it actually closed a daily bar above. And then Tuesday, it just dropped like a stone. And then after that, what made it even more tricky was the fact that when the latter part of the week started to happen, look what happened. We broke trend to the downside. It actually broke the minor uptrend here, which is just kind of the bounce action off of this move. Call it dead cat bounce or whatever. We actually broke trend. And then not only did we break trend, but the next day, which was Thursday, we actually went lower than that low. And I'm going to get into that in a little bit. If you keep this in mind, because when I talk about the losing trade that we had in weekly options advisory, which was bearish, it's because of this. It's because of this undercut right here in this little action. So I would say the price action this week has been very confusing. There's been a lot of false starts here, a lot of kind of false technical events. But the big event is, of course, the trend line break, which has happened now, meaning that this downtrend line that we just looked at has now closed a daily bar well above it due to Friday's gap on Apple earnings and also the non-farm payrolls, right? And look at the huge space down. Now we're above, and it even closed above this high right here, which is interesting. So whenever you have a trend line break like that, we have to assume that the downtrend is over. I don't know if the potential is there to go all the way to here, but I am now cautiously bullish. I cannot any longer be bearish given that this line is now broken. So that's the beauty, I think, of technical analysis, is that in a way, it can be very absolute if you let it be. It doesn't have to be nebulous or opinion or subjective. It is what it is. We have now broken trend in the S&P. All right, in the NDX on the daily, similar situation, right? I've already drawn in these little trend lines here. And again, the fake out move here, down below. And here's the close on Friday up above. And could we go to here? That's not very well drawn. Could we go up to there, maybe where there's more of a primary, you could call this like a primary downtrend? Certainly. I mean, that's not even that far away. If you recall in the weekend edition recently, up on the big screen, I talked about this consolidation area, correct? And look where we closed. We closed at 890 up inside of it. I was talking about 850 being the low end of this area, and now you close at 890 up in it. So is it going to be a little bit difficult to chop through this? It should be, but it's also going to give you a lot of market generating information if it's not difficult to chop through it. If the market actually just rallies hard in the next couple of sessions and goes through it and comes to the line, that's going to be a much more bullish signal. So just keep that in mind for next week. We all know trading is stressful, so let's take a short break right here for something that I hope will make you smile. Oliver, is the market going up or down next week? Oh, he's busy, I guess. No answer. Okay, let's take a quick trip through the 11 sectors of the S&P. Remember, these 11 sectors make up the S&P in different weights. So the weights change once a month. On the last day of the month, you can go to spglobal.com for that. This first one here, technology, is 29.3% of the S&P, and then they move down from there. Like healthcare is about 12.5%, financials are about 13%. It just moves down from there. So for these, I'm going to go on weekly charts, and we're just going to kind of flip through them relatively quickly. So just for the interest of, is it bullish, is it bearish? Remember, the S&P can only do what these 11 sectors do. It's all just added up to these 11 sectors. So this is technology. Looks pretty good, right? You're now potentially retracing this whole weekly bar if you can get a little bit higher. But obviously, the downdraft seems to be over there. Healthcare, a little bit weaker, and this is something to keep in mind because this is 12.5% of the S&P. So obviously the bounce here has been a lot weaker than everything else, and certainly this downdraft has been pretty weak. So keep that in mind. That is going to act as a little bit of a drag on the market as it is weaker. Moving on to the next one, which is of course financials, big sector. This is now 13.2% of the S&P. I would say also a little bit weaker. It hasn't really bounced all that much. So is there potential that this rolls over? Yeah, we could. And this is why I'm not like all out bullish here. I'm kind of cautiously bullish as we've just kind of broken this trend. Consumer discretionary. Let's go with that one. I would say pretty bullish. Decent odds that you go back here. You're kind of in the middle of this range. Maybe a little bit higher than the midpoint. Yeah, I'd say you're higher than the midpoint. So not really bearish, not really bullish, just kind of moseying along in there. Let's look at industrials. Again, we're looking at weekly charts. I'd say looks good. I mean, didn't come down very much at all in these 2 weeks, and potential even to break downtrend here, which may already be happening, I think, kind of. Yeah, you can see already kind of breaking downtrend, as is the S&P. So it makes sense. Let's take a look at communications. This is 9.2% of the S&P. Some bottoming tail hammers there on the weekly, which is certainly more bullish than bearish, with two back-to-back reversal bars. Next, we have a staples, which makes up about 6.3% of the S&P. These look fantastic. Notice that over the last 2 weeks, or I should say specifically in the week prior to this week, look at the move. It retraced 100% of the down move. So there you go, right? Definitely nothing majorly bearish in the staples department. Energy, quite strong. It's been strong, and this pullback really is nothing more than a pullback in the context of a bullish pattern. Utilities I've been very bullish on. Now these sectors that I'm talking about now, they don't have a lot of weight in the S&P. For instance, energy is only 4%, utilities are 2.4%, but utilities are very bullish. Those of you who are with me in the weekly options advisor, you know that we had a killer pairs trade with being long utilities and short technology, both of which went deeply profitable. And then as the market was bottoming out, we closed the technology short at a gain, and we continue to hold the utilities long. And that's working out very, very well. You can see it's been like 3 solid weeks up and just working very well. And I think if you look at this chart, utilities actually have a ways to go. There's no reason why we can't see these highs here over time, which would be about a 78 on the XLU. All right, last but not least, rounding out the 11 sectors is materials and real estate. Materials look good, so you've got gold and things like that in here, and that looks good. And last but not least is real estate, XLRE. And that does not look so good, right? Because obviously you see the downdraft here, and how much of a bounce have you gotten? Very, very little. So we shall see. This is, sector I think is being beleaguered by the whole higher for longer argument. The outlook for interest rates for 2024 is still cloudy. It kind of keeps changing, and I think there's just not much commitment to the sector, and that's why we're seeing this. However, it is going to rally at some point, and I think that rally could be big because you have to look at this as one big consolidation area. And this is really building up a lot of pressure here. It's a lot of pressure. So at some point, watch for a break out of that box, so to speak, maybe above the 41 level in the XLRE here in this ETF that tracks the index. And it could be a longer term trade that you may be interested in. Probably though, once the market gets a clearer picture of whether or not there will be rate cuts and when those rate cuts might be happening. All right, let's get into this trade here. If we were in front of the big screens on the weekend edition, we would be calling this the play of the week, perhaps, in the segments that we do. But I wanted to kind of highlight this losing trade that we had recently. This was Friday of this week, and it's this one here, number 1502. I'm actually pretty psyched that we've now crossed the 1,500 mark in our trades. We now have 1,500 live trades since inception. But I want to talk about this one specifically, especially because I feel it has huge educational import as far as the timing of the trade. So basically, it is what we call a reverse mullet. And I'll tell you why I do it like that. A reverse mullet is where you have a butterfly where the front part of it, I call this the front part because it's on the put side, it's going down. So we're long the 50-15 strike in the S&P and short 2 of the 5,000. And in a normal butterfly, the third strike would obviously be 49.85, right? So that there's a 15 wide difference between the long vertical and the short vertical, or rather the width of those verticals would be the same at $15. If it was a broken wing butterfly, then the third strike here would be, let's say, 49 80 or 49.70 or however far down you want to go and make it a broken wing butterfly, which would allow you to put it on for potentially a credit. This goes the other way, however, where it breaks the wing and it, instead of breaking it out, it breaks it inward, setting up what we call a reverse mullet. You can look up reverse mullet in the glossary section of our website. And the purpose of why I often do directional trades using a reverse mullet structure is because if I'm wrong, the reverse mullet gives you a lot more opportunity for adjustment and ways to get your debit back. And you do that by simply taking your $49.95 and putting it down to 85 where it needs to go. So now you've got a vertical that you can sell to get some of this debit back. So this happened on the 2nd, which was Thursday, on the big reversal. And the reason I put this on is because of what I showed you in the charts earlier about the trend line break and the moving down on Thursday, which then reversed itself. Let's go into the charts and we'll take a look at why this happened, where it happened. So in order to really show you what's going on here, I'm going to show you on the ES instead of the cash market because it's a lot more important. So this is how I got faked out essentially, and I put on that short at the worst possible time, or that, you know, that sort of long negative, or delta rather, right? That short delta debit trade. This is the activity on the FOMC, right? So you had this hard up and right back down. And then the next day, that was on Wednesday, and you have this overnight activity here, and then the market starts to sell off hard within the pre-market and the first hour of trade on Thursday. And then what does it do? It goes down so much that it actually breaks this low. See here, right? It actually breaks this low. And as this low is breaking, this is the exact spot where I put on that trade. So to me, it made perfect sense at the time because you don't see it here on the chart. It more shows you on the profile. But there are multiple lows here from multiple sessions, meaning that this is an overnight session. This is an RTH session. Then in this overnight session, you did it again in here, right? You come down, and here in this RTH session, there was already these 1, 2, 3 parts to it, and we start to break. And so I'm thinking, okay, multiple sessions in the ES, because I think of the overnight as its own session. Multiple sessions are breaking. And at the same time as the sessions are breaking, remember that I'm going off of what is happening in the cash market over here, thinking that, okay, because we are below trend, makes perfect sense. As we draw the trend line here, we've now lost it, and here, which was Thursday, and now you rally back up. That was Wednesday rather, excuse me. And on Thursday, we're going back down below the trend line and taking out this low. So to me, from a technical basis, it's setting up everything I need to know. And it's a trade. And so we put on a decent size, 4 units, and we put on a debit trade using the reverse mullet situation. And if we go back to the trade here, we can see that we put it on for 455. Okay, then as the market turned around hard, I immediately cut it in half. So this loss actually could have been much worse, but we cut it in half. And at that point, as the market already started to rally, we're only getting 315 for it. Then later on, I start to move the low strike of the 49.95 down to 4,900 to collect a decent sized credit, but I only do it one at a time. I have 2 I could do, but I only do 1 at a time. And by the end of the day, also because Apple is going to report, I kind of change my mind on a little bit of it and I move it back up. So unfortunately, I have not taken back enough of the debit. And then obviously the market stays very strong and the market rips up. There's still plenty of credit in here to get back on Thursday night. But of course, Apple reports on Friday, or on Thursday night rather, and on Friday, all of the premium is gone and it turns into this loss here. I'm not able to get back any of the premium. So what are the lessons that could be learned from this trade? When you have a situation, you false break like this, and you have multiple tests of an area. So I'll take you back to the 60-minute. When you have multiple tests of an area, it should go. And I think the mistake that was made was if it doesn't go right away, at that point, being that we've already spent so much time here, it's probably going hard in the other direction. So this was kind of more of a psychological issue too, because maybe I refuse to believe it, right? I mean, we all have our own things going on psychologically. And to me, I thought that maybe, okay, it just needs more time. It's going to bounce a little bit. It's going to retest that, but it never retests. So you can see here as we start to move up in the hourly bars and we're tailing off, that's about where I close the rest. I close off two parts of the trade. I cut it in half to bring the debit down dramatically. And again, we closed kind of near the highs. And I'm thinking, okay, I still have a chance here. We haven't taken out the Fed high here. I have a chance to get back some of that debit. But then, of course, Apple reports, and you can see what the futures do here on the report. And then we also have non-farm payrolls, and the rest is history. So that's pretty much it. Again, takeaway from this, probably just that when you have a situation where you have multiple lows and you know what should happen, this turned into a classic, what I call WWSHD, which simply means when what should happen doesn't. And when what should happen doesn't, the opposite is going to occur in a big way. Okay, let me give you some trade ideas for next week. These are all my kind of like #1 draft picks, stuff I really like. If you recall, in the weekend edition recently, American Express was the #1 draft pick. And at the time, I was looking at the pullback here. We had only seen charts up to here. These 5 days hadn't happened yet. And I said it was a buy here, more than likely on the 8 EMA. After that, it did go higher just for 1 day, but then decided to sell off down to the 21. So what it really needed to do was the 21. I am now long the stock. I wasn't here on this move, but I am long at 239.70. So I'm up about $1 here so far. And the reason I did that is because I was watching today, this being Friday the 3rd, I was watching this on a shorter term chart this morning, and I was seeing this pattern develop, which to me is beautiful. We know that this low here is the 21 EMA, and look what happened since then. Up, higher low, and then back up to retest this area. So right in here is where I'm getting long. And now I've got a very obvious place where to put a very tight stop, because I know that 21 EMA on the daily is there. So that's American Express. And I think you can still take this one. It hasn't moved all that much. And we're talking about, right here, it went up about $2. Now it's only $1 off that low. So potentially this is still in play for next week. All right, let's go to another one. I'm going to show you Adobe here. Alpha, Delta, Bravo, Echo. Daily chart on Adobe. Pretty obvious, right? I mean, just downtrend here, just ugly downtrend. You got a gap here that needs to fill. And it has just now started to perk up above this line, right? We can draw the downtrend in like this. We can even go fanning it out like this. Look at these sessions right here, all touching the line. You can have a short downtrend there. And now the stock has broken clearly above the line. And like I said, plenty of upside here in Adobe. So I think that is a potential long as well. All right, I want to see this, kind of see what it does on early in the week. If it can come in here maybe to a higher low, maybe it's like an inverted head and shoulder situation. But potentially these puts on a pullback are probably a sell for me. Like 460 puts are probably a sell in Adobe. All right, let's take a look at Boeing, a name that has been very, very out of favor as of late. But remember, these stocks that are out of favor can often be some of the best longs. What draws me to this chart is the simple fact that on this daily, you have now retraced 100% of this move, which was a huge downdraft on a very large increase in volume. So the fact that that entire move has now been taken back and you're holding above it, I'm paying attention to this uptrend line here. And again, I think it could come down a little bit to retest this breakout point. For me, potentially 170 puts short will be in play, and maybe some sort of an upside structure as far as calls are concerned as well. Okay, NFLX is the next one. Huge gap down recently, but look what just happened here. Look at this, right up to the bottom of the gap, 21 EMA right there, and you've got all this empty space to fill right up to 600. I put on a spread in weekly options advisory which you can look at if you go back to the prior screen, you can see the trade there. I've got a unbalanced butterfly that's kind of like an unbalanced reverse mullet, so to speak. I'm in the 580 strike. I'm short 3 times at the 600 strike, and I've got the 610s up here to kind of cover it off. So I'm looking at that. On a pullback, I would probably also add a short put component to this trade, probably around the 560 strike. All right, and last but not least, I want to share with you Target, TGT. Target, to me, looks like it wants to potentially turn to the upside, although it hasn't done much yet. But the reason I mention this one is because it just filled the gap. And a lot of times when the gap gets filled, the downdraft is over. You can see it filled the gap. So what I'm going to be looking for here is, obviously the stock didn't act very well in the face of Friday's advance, but that's okay. That can happen. Stocks can sometimes be opposite the market and kind of get in gear later. What I want to see is how much of this area gets retraced. If you retest this low, it's probably not a buy for me. That probably means it's going lower. But if you come in somewhere here to a higher low and catch yourself, right, then it's potentially a long for me. And you've got a long way to go, I think, here, even just before you get to the downtrend line. So you could potentially move the stock from about 159, 160 up into here, up to about the 162 range, and then you can reassess the situation from there. Okay, new stuff at ShadowTrader.net. So Squawk Box has now been rebranded as Live Trading Suite, and it is now 2 rooms for the price of 1. We've got a stocks and options room and a futures room. Also, welcome new team member right here. This is Scott Schneider, who is like a protege of mine, for lack of a better word. He's been working on some future stuff with me for a while, and he is going to be doing some moderating in the futures room. So this is now splitting into 2 rooms, one that is going to be stocks and options, which will be Brad, Michael Denblaker, myself, and Scott Gillum, and then the options room will be Jenny, Marchin, Gus, and new guy Scott. So we're pretty excited about that. This is kind of a work in progress on our site, but we're looking to launch this officially on Monday. But if you come in here to here, you'll see just basically some minor changes here. It's access to both rooms, by the way, just so you understand. It's one price and you get access to both. That means that you can listen to both rooms at the same time if you want, if you have 2 tabs open or 2 computers, whatever you want to do. But it's not a either or, just to be clear on this. You don't have to choose one or the other. We're actually just expanding our offerings, and it is now the 2 rooms for the price of 1. And prices are all staying the same. If anybody wants to check us out, I think the best way to do so is to either take the $7 1-week trial, or this, which is kind of a no-brainer, is you can sign up here with an account at Tasty Trade and get 6 months of this service for free, which we're pretty excited about. All right, so check us out at ShadowTrader.net in the Live Trading Suite. And again, 2 rooms for the price of 1. And basically this all came about because we started polling our members in the Squawk Box, and everybody was saying that they wanted more of a dedicated futures room. As it is now, we only have futures trading in the afternoon, and obviously the best futures trades generally happen in the morning session, so we knew that we needed to have some dedicated futures trading in the morning session, so we're very excited about that. All right, so check that out at ShadowTrader.net. And that's my show for this week. As things turn towards more cautiously bullish with these trend line breaks, if you are listening to pundits out there or things on Twitter, X, whatever you call it, and you start to see people telling you that it's a trap, because that's a common thing people say when there is a rally in the context of a downtrend, they'll tell you that it's a trap or a bull trap. That is really only true until you break trend. This market has now broken trend, so you can't really say it's a trap. Now you're going to have people seeing that trend line break, and they're going to start to be thinking more in the bullish camp. Obviously, anything can happen, but here at Shadow Trader and in my own trading, we respect the charts, we respect technicals, and we act accordingly. All right? Make sure to check out our new futures trading room, part of our Live Trading Suite, which is part of the rebranding of our Squawk Box, which has been our trading room that we've had running since back in 2006. We're excited about that. Remember, you can always take a $7 1-week trial to that room or my room, Weekly Options Advisory, and you can also get an entire 6 months free from our partners at Tasty Trade of the live trading suite. So check that out on our site at shadowtrader.net. All right, I'll be back next week with the full setup, the actual weekend edition that I've started recently with the whole new studio and 2 big screens and all that. Special guest next week. That's going to be happening on May 10th. I'm excited about that. And until then, coming at you from Los Angeles, California, as always, I wish you good trading and good night.